Session. Okay, click on share. Of this.
Hello all. I hope I'm visible to you. Can someone acknowledge if I'm visible?
Yes, Praveen, you are very much audible.
Thank you. So
Yes,
thank
sir,
you
you are
for,
audible.
yeah,
You are audible, sir.
yeah, I'm audible, right?
Yeah.
Okay. Thank you. Thank you so much for joining this webinar and for being so patient. Let me just start this webinar by introducing myself. So basically, I'm an NISM certified research analyst. I've been associated with Tradejini for nearly 1 year, and I've been doing fundamental analysis and research from past 6 years. And since we are talking about the construction industry, uh, usually experts talk about construction industry who are an industry expert. So what I'd like to say is I have a master's degree in structural engineering. So I thought I'd pick this webinar uh, to start off. And that's it about me. Just let's get into the webinar. So here, uh, for the construction industry, the infrastructure push that the government has given is about 11 lakh crores. So about 50 lakh crores as expense has been spent by the government in 2025 alone. So out of that 11 lakh crores has been pushed only for infrastructure. So there's a huge boom for infrastructure in the coming years. So here what we're going to do is we're going to talk about proxy players. I'll explain what proxy players are later, right? And we'll talk about the leaders and how mechanization and technology is going to shift. I think somebody's audio is on. Yeah. So then we'll talk about the export opportunities and then the investment insights. So I don't know if most of you know about the California gold rush. I'm sure a few of you know about what California gold rush is. So in 1848, somebody discovered gold in California. So when this happened, a lot of people, the word got out and a lot of people came into California to mine for gold. About 300,000 people moved to California just to mine gold. And there were a lot of miners, a lot of companies started setting up bases. So this was happening. So here what happened is a lot of people made money and there were a lot who did not make money in this gold mining fiasco that happened. But here there were a few clever people who set up equipment stores around California, right? So whether the gold miners made money or not, the people who sold the equipment to these gold miners made a lot of money. So all of them became very rich. So what they did is they bought huge amounts of picks and axes and shovels, and they sold them at a uh, higher rate, like 4 times, 5 times the price. Uh, just hold on.
System to mute.
Can somebody mute your audio? I mean, someone's audio is on. Okay, sorry, there was a disturbance. So let me continue. So what happened here is all the companies that sold picks, axes, and shovels made a lot of money. So these are the kind of companies that we call as proxy players. So right now in the construction industry, there are a lot of companies, large construction companies, infrastructure companies, but there are also proxy players in this industry. So we look at a few proxy players. So when we think of proxy players, what do we think? So we think about cement industry, then steel, that is TMT bars, paint industry. So we know who all operate in these industries. So I'm not going to talk about this, right? Let me talk about certain companies, that four companies that we have picked. So Action Construction Equipment is the first company, then Ajax Engineering, Interarch Building Solutions, Capacity Infra Projects. So these are four companies that we'll be talking about today. So what are the types of construction that is there? So there's infrastructure construction, roads, highways, bridges, metros. So all this is because of the government's push. The government is pushing for such construction. And then there's residential projects, huge construction malls that's happening. You can see people who are from Bangalore, you can see there's a lot of construction activity happening in and around Bangalore. Thank you for joining, Walter Wahid. Yeah. And then specialized institutional projects, hospitals, schools, stadiums. These happen once in a while, not always, but residential and commercial real estate projects, they all happen regularly. Then there are industrial construction. Industrial construction is related to factories, warehouses, plants, data centers. So we know Flipkart and all these guys have to set up warehouses. So there's a lot of boom for warehouses. Data centers have to be set up, and then you need a lot of warehouses and factories, right? So what the government is doing is, government is pushing 11.21 lakh crores for capex alone. That is a 10% up year on year from the previous year for FY26. So this is going to happen. There is going to be growth in the future in the construction industry. So since we are a growing economy, there's going to be a lot of growth. Tier 1 cities are getting crowded. Then there are tier 2 cities which are going to be developed. Then there are smart cities. For all of this, we'll have to do highway constructions and all kinds of construction that's going to happen, right? And the construction industry itself is bound to grow at 12 to 15% annually, so which is higher than the GDP. So this construction industry has got a huge boom. So urban real estate opportunities are there. Mechanization of concrete equipment. Back in the day, we had a lot of laborers. So now we're using less labor and more equipment. Let me just admit. Thank you, Mr. Ramchandra, for joining, and Mokshagna. Yeah, let's get back. And then we'll talk about pre-engineered buildings. I'll explain what pre-engineered buildings is. Even pre-engineered buildings is growing at 11 to 12% CAGR. Okay, year on year. Pre-engineered buildings are related to warehousing, e-commerce, logistics, and manufacturing, that kind of stuff. So there's a common growth driver. Then obviously we spoke about government spending, urbanization. So how are proxy players going to benefit from this? Right? A proxy players are going to get indirect benefit. So these people don't build the roads or towers, but they supply equipment or material to the companies that do them. And most of these companies are less cyclical than the core builders themselves. And the thing about proxy players are they're early beneficiaries. If there's a project that's announced, there's a large capex project announced in and around an area. So the proxy players benefit first because you'll have to buy equipments from them and then start your project. And a lot of technology and mechanization that is happening. Even this is driving the proxy players. So the very first company that we are going to talk about is Action Construction Equipment. So Action Construction Equipment, like you can see in this picture, they uh, manufacture and sell crane towers. They have a market, they are the market leader, and they have 63% of market share in cranes. So you can see you have movable cranes on the left here. This is a movable crane and this is a tower crane. Uh, if you see the construction that is happening around metros, you would have seen this, or large construction projects, you would have seen this tower crane. So this is their product portfolio. See, in cranes, they have pick and carry, lorry loaders, rough terrain, crawler cranes. Crawler cranes, I keep seeing them near metro construction projects. Then there are huge tower cranes. Then there's construction equipment. So backhoe loaders. Backhoe loaders are nothing in layman language, what we call here is JCB. So they also produce this. And there are equipment handling equipment as well. Equipment handling like forklifts, trucks, warehousing equipment. And then they also manufacture agriculture equipment, that is tractors and track harvesters. Let me admit few participants. Thanks, Prince. Yeah. So these are the equipments that this company manufactures. So this is a proxy play to the construction industry. So they have the nation's, they've built the nation's largest 180-ton mobile crawler crane and aerial work telehandlers and a 35-ton next-gen 4x4 crane. So they can handle huge projects. So if you look at their revenue split, their revenue comes from cranes, material handling equipment. That is about 93% of their revenue comes from material handling cranes equipment alone. And then agricultural equipment makes a small percentage, that's around 7%. Let's look at their total income that has jumped from 1,640 crores in financial year 2022 to 3,427 crores in financial year 25. So that is a double in 4 years. You can also see the EBITDA margin shooting from 9.89% to 17.68%. So they've also increased their margins. So what's special about this business is they've been increasing their sales. They've been increasing the volume of sales year on year. But their costs on labor has stayed the same. So they can use the same workforce and produce more cranes. And the manufacturing cost also has stayed the same. So the manufacturing cost is the same. Let me admit Kadiravan. Okay. Thank you. Thank you for joining. So this company has got a huge market leadership, right? For a pick and carry manufacturer with 63% of market share and 60% market share in the tower crane segment alone. So they are almost like a monopoly company. Not a complete monopoly, but almost like a monopoly company. But since they have a huge market share, doesn't mean they don't have ground to cover. There's a huge ground to cover. There are more construction activities happening. There's more growth in India. So even if they hold on to the market share or increase the market share, they're going to increase on their volumes. There's a lot of volume that's going to be added. So let's look at their sales network. They are located in 125 plus locations, 200 plus agri machinery, 25 regional offices, and they are located globally as well. They have exports to 37 plus countries, including Middle East, Africa, and Latin America. Now, who are their clients? Like, who do they sell their equipment to? They sell their equipment to companies like L&T, ACC, Ashok Leyland, Delhi Metro, Bosch. They have a huge clientele base. So let's look at their numbers right now. So I'd like to talk about their trailing 12 months PE ratio. That is at 30.4. So that is price to earnings. So if you're paying 30 rupees for this business, we're going to earn 1 rupee. So for every 1 rupee earned, we're going to pay 30 rupees for this business. But if you look at their sector, which is at 36p, so they're undervalued compared to the sector. This is the sector average. And the market capitalization is about 12,852 crores. So what about their valuation compared to other companies? We have companies like Sangvi Movers. Caterpillar is a US-based company, Brady and Morris Engineering. So let's look at Caterpillar here. Caterpillar has a PE ratio, 24.3, which is lower compared to Action Construction Equipment. Why is it lower? Why are people ready to pay higher for Action Construction Equipment? Is the only reason is because it operates from India and they have a huge growth potential. Whereas Caterpillar, though globally present, the growth is less. US has peaked out. It's a peaked out economy. So the growth has slowed down. But comparatively, India's growth is ongoing. So let's look at their ratios. The first thing that I'd like to talk about is this is a debt-free company. They are completely debt-free. If you look at their debt to equity, it's at 0. So whatever equipment manufacturing is happening is all through internal accruals. They have ample cash to run their business and they are independent of debt. This is a very strong balance sheet company. So if you look at their ROCE has been growing consistently from 2021 to 2025, which is at 40%, from 22% to 40%. That's a huge growth. Their income statement. So as I was saying, look at their sales growth from March 2021 at 1,200 crores. They have shot up to 3,300 crores, which is a double in 4 years, 4 to 5 years. They've doubled their sales. And what about their net profit? The net profit in 21 was just 80 crores. From 80 crores, right now they are sitting at 400 crores in net profits. So like I said, even if they're able to manufacture more cranes and equipment, their margins are not affected. They're able to control their margins. It's around 15%. They're able to keep their labor costs under check. They need the same amount of labors to run the show. So here, cash flow, if you look at the cash flow, their operating activities, operating cash flow has always been net positive over the years. And investing cash flow, here you can see it is negative because they have been investing in their equipment. They've been investing in expansion. So this is a cash outflow. So when there's a cash outflow, we'll see a negative cash flow. Here, there's a cash inflow in operating activities, and they've been consistently making a lot of money. So this is the shareholding pattern. About 65% is held by the promoters alone. And then we have a small percentage of DIIs and FIIs. So now they've also entered defense. They've been supplying material to defense. We know that defense is growing. There's a lot of defense growth that is happening in India. So they've been getting consistent orders from the defense companies to manufacture their equipment. So they're planning to grow there. So here in that, they have 420 crores of order in their defense manufacturing. So what happens is like 50 to 70 crores of it is planned for FY26 and 200 crores in FY27. So here in defense alone, they have a huge revenue visibility. And their opportunities also, government is going to put anti-dumping duties on China. So they're going to benefit about 500 to 1,000 crores is it's going to add as benefit to this company. So let's look at their capacity expansion. Right now, they're at 65% utilization. They have 8 facilities, and their operating capacity is at 5,000 crores, and it's at 65% utilization. So they're also expanding. They're going to add manufacturing for 15 to 18,000 cranes units, and they've acquired land of 138 acres for future expansion. So they know the kind of growth that is happening. Then 100 crores have been for capex. They do have some near-term challenges. They did have a drop in Q1 FY26 because of the CEV5 emission norms that the government implemented. Just like we have Bharat Stage 4, Bharat Stage 5 for our vehicles. For this construction equipment vehicle, we have CEV5 emission norms that have been introduced. So that switchover had actually affected their sales in Q1 of FY26. So this company is targeting sales of 4,400 crores in FY27 and 6,600 crores in FY29. So the sales is going to increase. They're going to increase their contribution from defense manufacturing. They're going to increase the contribution from exports. Right? The combined defense and export value is going to be around 10%. So there is massive growth in this company. And when we look at this company, we don't just look at a stock. We look at their business. So we're basically buying this business, right? So this business is going to make sales of 6,600 crores by FY29. That is their target, and they've achieved their targets in the past. I'll have to admit a few participants. Thank you. Thank you, Divya, for joining. Okay, let's get into this quiz time. This is just a fun activity. If Action Construction Equipment hits 4,400 crores revenue by FY27, guess the EPS and P ratio. Let me just open this for your. If they're going to hit 4,400 crores in sales, what would be the P ratio? I'll give you some time. Can people answer this? You have the current market price at 1,069. Sales at expected sales is 4,400 crores. You have operating profit margin of 15%, net profit margin of 12%. The number of shares issued is 11.92 crores. So can you forecast the EPS, and can you give me a forward PE value for this company? Right now, this company is at 30 price to earnings ratio. So also the second question that I'd like to ask you is, if production capacity is 18,000 cranes and utilization is 65%, how many cranes are made? It's a very simple question. Let me admit few people. And the third question I have for you is, if ACE's revenue doubles, but its fixed costs stay the same, will its operating leverage improve or worsen? Can you put it in the chat box? Disable. Okay. So for those of you who are working out, I hope I'll show you the answers for the first one. The answer is this. Their EPS is going to be 44 and their PE ratio is forward PE is 24. So next, let's talk about. So if all of you have finished your this thing, I'll get back to the next company that we're going to talk about. So Ajax Engineering is the next company that I'm going to talk about. So what does Ajax do? These are the equipments that Ajax manufactures. So what are they doing? They have a 70% market share with 32 units sold in the last decade, right? In SLCM alone. SLCM is self-loading concrete mixers. So self-loading concrete mixers are huge, used in road constructions and huge construction projects, government projects. And 32,000 units have been sold by this company, and it has a 70% market share in uh, this SLCM. And they have 52 dealers, 114 touch points, 28 international distributors. So let's talk about their business model and revenue. Self-loading concrete mixers contribute about 80% of their revenue. So it is a self-contained machine that can batch, mix, transport, place concrete on project sites, right? As I told, they've been used in rural, semi-urban areas, infrastructure projects, right? The rest of the revenue comes from non-self-loading concrete mixers. So that is concrete pumps, boom pumps, batching plants, and slip form pavers. So that is what we see here. This is a self-loading concrete mixer. This is a boom pump. Boom pumps are used in high-rise structures where concrete cannot reach certain equipment cannot reach certain heights. So for large quantities, you use boom pumps, and these are pavers. So most of you would have seen that in Bangalore, there was a lot of white topping that was happening, and this equipment was being used. And this is manufactured by uh, Ajax Engineering. So as I told you, majority of their revenue comes from self-loading concrete mixers, and non self-loading concrete mixers give the rest of their revenue. So 80% comes from SLCM alone. So about 1,753 crores alone is from SLCM.
Hello. Hello.
Yeah.
Yes, tell me, sir.
Hello. Can you mute the mic?
Praveen, I think you are on mute. We are unable to hear you.
Hello? You're not audible.
Can you hear me now?
Yes, yes.
Yeah. So what I was saying here is their sales has shot up from 742 crores in 2021 to 2074 crores in 2025. So there's been upward trajectory in their sales, and so as well in their operating profits and net profit margin. They've been increasing net profit margin and sales. So we'll look at their P ratio here. They are also trading at around 30 price to earnings, and the sector is at 38 P price to earnings. And their market capitalization is at 7,250 crores. This is their net profit. Looking at their income statement, in 2021, they were at 97 crores. Right now, in March 2025, they were at 260 crores. Here also, if you look at their debt to equity, which is nil, they don't have any borrowings, long-term borrowings. They don't need funding. They're working on excess cash that they have. And also, if you could see, their ROC numbers are also at 33%. Their operations cash flow is also net positive over the years. And if you look at their investing activities, they've been investing huge into expansion and improvising on their materials. This is their shareholding pattern right now at 80%, because this company had come out with this IPO this year. So right now you're seeing their promoter holding at 80%. So I'd like to ask you a question. With 70% market share in self-loading concrete machines, has Ajax already won or peaked? And the next question I have is 12% of India's concrete comes from Ajax machines. Is this a monopoly or opportunity? And another question I have for you is, if SLCM prices double tomorrow, would Ajax's margins improve or worsen?
Yes, sir, you can take your answers in the chat.
I have enabled the chat. If you have the answers, please post it in the chat box for the 3 questions that I've asked you. With 70% market share in self-loading concrete mixers, has Ajax already won or peaked? 12% of India's concrete comes from Ajax machines. Is this a monopoly or opportunity? If SLCM prices double tomorrow, would Ajax's margins improve or worsen? Do we have any answers? Okay, right. Let's get on with the next company. We're going to talk about Interach. This is a very special company. It does a very different kind of business. Let's get into this company now. So what do they deal with? They deal with pre-engineered buildings, that is factory fabricated structures. They don't build concrete structures. They build factory fabricated structures, that is steel structures. Where are they used? They're used in industrial, commercial, institutional applications like warehouses, factories, healthcare facilities. So companies like Flipkart or Amazon that need a lot of warehousing facilities, this company serves them. So what is special about pre-engineered buildings is pre-engineered buildings can save you up to 1/3. I mean, the cost of a pre-engineered building is about 1/3 the cost of a conventional building. So there itself, your costs are saved, and their construction time alone happens within 6 to 8 months. It's very quick. Usually, projects take you 2 to 3 years to construct, but pre-engineered buildings are very quick to construct. And so what does Interarch do? It does a B2B model. So they earn 93% of the revenue from turnkey solutions. That is, they manufacture the steel components and they go to the site and construct them at site. So the remaining of their revenue comes from selling their products, metal ceilings, corrugated roofs, structural components for other companies who want to construct that. Their item is called track and track deck, the corrugated sheets and all that. So pre-engineered building market is going to grow at 11 to 12%. So in FY24, it was at 195 billion rupees, and it's going to reach 340 billion. This is the estimate given by CRISIL by FY29. So this market share is going to increase. And let's look at this. So in FY29, pre-engineered construction constituted about 4%, and FY24 was about 5%. So the estimate for FY28 is about 5 to 7%. So pre-engineered building construction is going to grow. We need warehouses, we need factories, and a lot of people are looking for this alternative. So pre-engineered building construction is going to grow. And who is going to benefit from this? Interach. There are a very few number of organized players in this industry. The rest of them they're all unorganized. So Interach takes up all the big projects. So this is their revenue breakup. So industrial and manufacturing makes a very big part of it. And then there's infrastructure and others. So this is their order book. If you can see, their total order as of July 31st is around 1,695 crores. They have a good order visibility, and these are the key clients they've won their order from: Ather Energy, Tata Motors, Tata Projects, Balkrishna Industries, Amara Raja, Mahindra and Mahindra. So these are their clientele, and they've won orders from these people. So let's look at their numbers. Even they are trading at a very similar P of 28, that is close to 30, but they are over the sector P. But this is not the exact sector that we can see. This doesn't belong this is a very niche sector, I can say. So there is no way you can exactly compare to within the sector. But let's look at their market capitalization. Here they are at 3,290 crores of market capitalization. And if you look at their sales, they are at 3,300 crores. So the market cap and their sales is almost the same. So if you're able to buy this entire business today at 3,200 crores, you're able to make 3,300 crores of sales alone in 1 year. So this is what this company is available at, and their net profit is at 409 crores. So generally, this company works at an operating profit margin of 10%. So if you look at their debt to equity, this is a debt-free company again. It has a very strong balance sheet. And if you look at their ROC numbers, pretty strong, and it has been growing consistently over the years. This is the shareholding pattern. About 60% is held by the promoters. So this company is actually planning an expansion. So they adding their plant in Andhra Pradesh. That is the phase 2 in Andhra Pradesh. It will be ready by Q2 of FY26. That is now. It should be ready. That it's going to add a 200,000 metric tons to their production capacity. So right now they are able to produce about 140,000 metric tons of steel products. And if this expansion happens, they're going to add more capacity. This is going to add more capacity. There's going to be volume growth. And one thing I'd like to tell you about Interarch is they were working at maximum capacity and they had rejected orders that they had received recently last year. They rejected because they're not able to cope up with the amount of orders they were receiving, and their production capacity was overloaded. So what they did was they added this plant. But one advantage for this company is since they build their own structures, they're pretty fast at expanding. So they can build their own structures, buy the land, set it up within 6 months, set up all the equipment, and start manufacturing as soon as possible. So this is the management's outlook. So they have a goal, medium-term goal of 4,400 crores for FY27 and 6,600 crores by FY29. So we saw that their sales was 3,300 crores. So they're planning to increase their sales by volume. And also they're getting orders from defense companies. So they're going to add defense plus export revenue about 10%. So let's get into this quiz time. Okay, we have few answers from the previous. Okay, a lot of answers have come up. Okay, I'd like to ask you this question on Interarch. If steel prices crash 30%, does Interarch make more or less money? Please answer in the chat box. Are receivables your friend or enemy in this business? If revenue is constant but margins decline, does profit in absolute terms increase or decrease? You can answer these questions in the chat box. Okay, Dr. Ayappa has said yes. Somebody says, I have invested in Interarch this year. My buying price is 1,444. What do you think is the FAR price? What is the future of this company? Also, how is the current management? Will they be able to achieve the target and sales? Yeah, you have bought this at 1,400. This stock was at trading at 1,900. It had crossed 2,000. It has corrected, but I can't give you a target. We don't give a buy or sell, but I can say that 1,400 is a very good entry that you have taken. And this is a very long-term play. So this company is going to grow a lot. And obviously, if there's going to be sales growth and if there's going to be profit growth, the stock should follow. That's how it works. So all the best. Okay, somebody thinks it will decrease. Like more money if contracts are fixed price. Oh, Gavin Charles says that. Okay, keep putting it in the comments box, and I'll just switch over to the next company that I'm going to talk about. This company is called Capacity Infra Projects. So what does Capacity Infra Projects do is basically they are like your contractor. So if you want to build a house, you approach the contractor, you fix a price, they buy the materials, they build your house, and you pay them for it. You pay them for the service. You own the building, but they don't own the building. So this is what Capacity Infra Projects does. So they are an EPC company, that is an engineering, procurement, and a construction company. They deal with high-rise and super high-rise buildings and mass housing. And they've finished over 60 projects for about 64 million square feet of constructed area. So where did they do these projects? Mumbai metropolitan area, Bengaluru, Chennai, Pune. And who are their clients? The clients are Lodha, Piramal, Mahalakshmi, Oberoi, Enigma. There are a lot of clients they work for. So why did we pick this company is because of their order book. If you look at their order book, they're sitting at 11,250 crores of order book. So this is their order backlog. That is 11,254 crores as of Q1 FY26. And their order inflow, you can see it here, 1,290 crores. And previous year, they had 2,800 crores, 2,009 crores. They keep adding orders and they keep completing the projects. Okay. If you look at their order book to their sales ratio, it's at 4.8, which means that their order book is 4.8 times their sales. So this is a category split. So they mostly serve high-rise structures. That is 87% of their revenue comes from high-rise structures, and about 5% comes from super high-rise structures. They serve institutionals, residentials, and then they do public projects. That is 62% of their revenue comes from public projects, and 38% comes from private. These are the marquee clients that they have. They have both public sector and private sector. They've done projects for Oberoi Realty, Prestige, Godrej Properties, Lodha Groups, Tata Trusts, DLF, and here government projects for BSNL. They have huge client base. So let's look at their trailing 12 months PE. They are at a P ratio of 11 rupees. So if they're able to earn 1 rupee, this business, if the business is able to earn 1 rupee, it is available at a price of 11 rupees. Trailing 12 months PE is just at 11.63. And their market capitalization is at 2,294 crores. But if you remember, we saw the order book. It was at 11,200 crores. But right now their market cap is at 2,294 crores. So their order book is about 4.8 times. That is nearly 5 times their market cap. So if you are able to buy this business at 2,300 crores, we have a ready business for us at 11,200 crores that we can execute, and more projects will be added in the future. Let's look at their sales growth from in 2016 at 850 crores. They've grown to 2,300 crores. They are expected to grow faster now. Their net profit has been steady and has been growing steadily over the years. And right now it is sitting at 202 crores. So here, if we look at their debt to equity, they have a very small debt, not much. It's a debt to equity is about 0.22. So what is their vision for 2028? So right now the revenue is at 2,200 crores, but their target for 2028 is 4,000 crores plus. And their order inflow target is about 4,000 to 4,500 crores. And they want to maintain an EBITDA margin about 16.5 to 17.5%. and they also want to reduce their debt. So this company, how it operates is when they acquire materials from their vendors, they take it on debt. So, and they receive their money from their clients and then they pay their debt. So here their cash conversion cycle is negative. It's negative because they take their materials like steel, cement on debt, and then they pay their vendors once they receive their payments from their clients like Godrej and Lodha. So this is the end of it. Like we spoke about the 4 companies, and if you would bet on one of these players for the next 5 years, who would it be? Please put it in the chat box. Who would be a bet? Who would you bet on these 4 companies? Interarch. Okay, somebody says Interarch. I'm guessing the same person who bought Interarch at 1,400. Anybody else? Would you bet on any of these 4 companies? Action Construction Equipment. Okay. Now that's a good bet, actually. Action Construction Equipment is a good company. It's got a very good balance sheet. It's one of my favorite companies in this list. So basically, what as analysts in Tradejini, we don't look at stocks, we look at businesses. So what I would advise, I know a lot of you are investors as well. And for people who don't know investing or who are learning investing, I would say that if you are planning to buy a stock, don't look at the stock, look at the company. Would you want to own this company? Look at the business. Would you buy this business, own this business? Only then invest in this company. Any more answers?
To message something. Hello all. Thanks, Praveen, for this good interactive session where you gave us a lot of insight about 4 companies. So audience, we are open for Q&A session. You can unmute and ask questions. You just have to click on the mic below in your Zoom app and ask questions, or else if you are watching through YouTube, please type the questions in the comment section. Any questions from the audience? Okay. So Auntie, yeah, some of them are typing the questions in the chat box. Yeah, we got. Okay, one question from the is the housing recovery driven more by the end user demand or the investor or a speculative demand? Now it's 2 factors. One, like in certain cities like Gurgaon and all, it's more of investment and speculative demand that's driving the demand for the residential projects. But if you look into tier 2 cities, the easy availability of the credit facility and the increasing availability of the income with the people, we are seeing a lot of construction activity and renovations taking place in the tier 2 cities. So it's a combination of both. Now, you can also refer to our Tradejini decoders where we have Tradejini Decoder. Okay, so you can refer to this portal, tradejini.com/decoder. We will be sharing this in the chat box. We have actually decoded a lot of businesses like VA, Tech, Wabback, then the business model of hospitals, the business model of Exide Industries, BLS International. So like this, there are around 23 companies that have been decoded over here. So you can refer that, do read it, and do comment, share your views. So thank you all for your spending time with us on the Saturday. I thank Praveen for conducting this session. Thank you all.
Thank you all for joining. And I'd like to thank Tradejini for providing me with this opportunity to conduct this session. We'll be conducting more sessions like this in the future. And sorry for the delay initially, but thank you for joining.